Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a report from Virpax Pharmaceuticals, and let me tell you, it's got a twist, which sounds like a dance move gone wrong, but it's all about the stock price. Virpax Pharmaceuticals just filed a report with the Securities and Exchange Commission. This report, called an 8K, tells investors about big changes that could affect the company. The most interesting thing in this report, a reverse stock split. Let's break down what that means and why it matters. The big date here is March 21, 2025. That's when the company put in place a reverse stock split. Now, what is that? Well, imagine you have 25 slices of pizza. A reverse split is like taking those 25 slices and combining them into one super slice. You still have the same amount of pizza, but fewer, bigger pieces. To make this reverse split official, Virpax had to file a certificate of amendment. Think of this as the permission slip they needed from the state of Delaware, where they're incorporated, to change the number of their shares. The certificate says they're doing a 1-for-25 reverse split. Basically, for every 25 shares of stock you used to own, you now own just one. Before Virpax could do this, they needed their shareholders to agree. Back in January, they had a special meeting where the shareholders gave the okay for the board of directors to decide on the exact split ratio. The board then decided on March 5, 2025. That 1-for-25 was the magic number. This reverse split dramatically changed the number of shares Virpax has out there. It went from about 31 million shares down to roughly 1.2 million. Fewer shares mean each share represents a bigger piece of the company. Even though the stock is still trading under the same symbol, VRPX, there's a new CQSIP number. Think of a CQSIP like a social security number for a stock. This new number helps keep track of the shares after the reverse split. Now, what happens to things like stock options and warrants that people have to buy the stock at a certain price? The company had to adjust those two. They changed the number of shares you can get and the price you pay to reflect the reverse split. If you want to read all the details for yourself, you can check out Exhibit 3.1 in this report. It's a copy of the Certificate of Amendment, which spells out everything in legal language. The report was signed by Jatinder Dhaliwal, the Chief Executive Officer of Virpax Pharmaceuticals. This is important because it means the company is standing behind the information in the report. So what does this all mean? Why would a company do a reverse stock split? Usually it's to boost the stock price. Sometimes a company's stock price falls too low and it risks getting kicked off the stock exchange. By doing a reverse split, they can artificially increase the price per share and stay listed. However, it doesn't change the actual value of the company. If you owned 1% of the company before, you still own 1% after. It's just divided into fewer pieces. It can also be a sign that the company is struggling and needs to create a perception of higher value. Now, let's step back and look at Virpax more broadly. Reverse stock splits are often viewed with skepticism. It often comes across as financial engineering to keep the company afloat. Whether Virpax can turn things around remains to be seen. But for now, this reverse split is a key move that investors should watch closely. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a thumbs up and subscribe for more insights into the world of business filings. What do you think of Virpax's move? Let us know in the comments below.